Hello, I'm Peter Towers, founder and managing director of ESS BIZTOOLS. Thank you for joining us for this presentation of the Accountant's Minute podcast. This week, our theme is help SMEs get the funding they need. This is very important because SMEs are looking around for opportunities to survive in business, and many of them are wanting to grow their businesses. They have ambitions to scale up their operations, but they need assistance. They need assistance from accountants, business advisors, and bookkeepers who can deliver real value. Not just say to them, oh, we only do tax, or if it's not a taxation question, I can't help you. They really do need your assistance. I think you need to place yourself in a position as if you were the employed accountant, if your client was a wee bit bigger and had more cash flow, and understand what your role would be. The client needs input. Most SMEs do not really understand financial matters. They pick it up along the way if they're successful. But they really need someone like our profession who are attuned to figures and numbers and projections, budgets and cash flow forecasts, who are experienced in reading the law and understanding what is meant in various government publications and actual legislation and interpreting it for them. I think that's your role. So access to funding is one of the most significant challenges faced by SMEs. They hear stories that people can raise capital from the public, and yet they get told by others in that very knowledgeable place, the pub, that that's not so. Well, it is. Private companies can raise money direct from the public without having to issue a prospectus. But there is a process, a procedure, and there is government control. So they need a key advisor who can guide them on this process. And it should be you, because you know or should know the key numbers, the key performance indicators, the business metrics, the valuation of the business and how it was prepared, the care that was taken in the preparation of the budgets and cash flow forecasts, and what that all means within the business. This is important. It's important stuff for your clients, for them to have access to an advisor that can help them on this very important journey. But funding's not a one-size-fits-all type of proposition. It varies. Some of it's based on the turnover of the business. For some funding, we have limits of $25 million in turnover and a capital raise of $5 million. And in others, we've got a maximum capital raise of $2 million. And in others, we've got a maximum income for the company of only $1 million, of $200,000, and expenditure of $1 million. So we've got all these variables. And you need to be aware of these so you can advise your clients. But as part of funding, there is something that is not going to cost a lot of money, and that's government grants. There's government grants for the Export Market Development Grant. Do you know that an exporter exporting out of Australia to most overseas markets, unfortunately doesn't include New Zealand, but to most overseas markets, can accumulate government grants of about $780,000 over a 7-year period. Now, that's all on a 50-50 basis, so your client's got to have the cash flow to match it to earn the reward of $780,000. But it's a fairly big incentive, isn't it? And they will need your assistance because they need an export market development plan. They need a whole strategy relating to their export opportunities. And guess what? We've got all that material available within ESS BIZTOOLS to guide you through that process, to help you to supply that knowledge to your clients. And the other major government grant that a lot of people ignore, because some accountants think you've got to be a scientist or an engineer to give advice in this area, and that's research and development. According to AusIndustry, the government department that with the tax office monitors the research and development program and actually undertakes the assessments to determine whether appropriate research activities are being undertaken, have indicated that there are thousands of SMEs every year undertake research and development. How many clients have you got that are undertaking research and development? Whenever I talk to an accountancy firm, I inquire about research and development. Is that service offered to the customers, to the clients? And I find that it's very rare. I get excited when someone says, yes, we supply research and development services. And I say, great, now take me through it and give me an overview, please. Unfortunately, some of them are only doing what we describe in the research and development introduction package, but at least it's a start. But the number of firms that actually go the full journey and take it right through from the very start of an idea until the annual return on research and development activities is lodged with AusIndustries, and that is 10 months after the end of the financial year, is when it has to be lodged. But I always recommend lodging it in January of the following year. The 10 months is up at the 30th of April. Don't lodge then, because a lot of other people are lodging. And it takes the AusIndustries 2 to 3 weeks to process the pile of documents that hit them at the end of April. Now, one of the problems is that you will then be held up in lodging your client's income tax return for that company until you receive the all-important registration number from AusIndustry, which you must then embed into the tax return for the company so that they can claim the research and development rebates, incentives. So it holds the whole process up. And your client might be very happy if they're trading at a loss, because if they're trading at a loss, they can claim the cash equivalent of the research and development incentive that they would have been entitled to. They can get it back in for their working capital. So a word of advice: if you've got clients undertaking research and development and they're trading at a loss, be prepared to get hit in late July, early August, because they will want everything finalised and lodged by the end of September so they can receive the payment of the cash equivalent straight into their bank account, which the tax office guarantee will be processed within 30 days of the tax return being lodged, as long as everything's in order, of course. And your client can use that money for further research and development activities. So perhaps your program should be set up in such a way that you're aware of the number of clients you've got undertaking research and development, and you're able to give them the service that they would like. Now, why did I say at the beginning of this comment on research and development, you don't have to be an engineer or a scientist? I said it because some of my professional colleagues around Australia have said it to me. Oh, Pete, we can't do research and development. I say, why not? I'm not a scientist or an engineer. And I said, what's that got to do with it? Please tell me. Because I've been doing research and development projects for a long time. And I got a brother who's a civil engineer, but I'm a bit different to him. My other brother's a former partner in a major Big Four firm, and we're a bit different to our engineer brother. So why is the distinction of engineers and scientists? And he said, well, they're the people that are undertaking the research. You say, no, they're not. It's your client that has to do the research and development activities. And if your client needs assistance, they need to hire personnel from universities or specialist research activities, businesses in Australia. And they're there. Your role, I think, is more able to be described as being an internal auditor, because you have to make sure the forms are completed. And some of the forms are daily, because you will find clients who are undertaking research and development activities literally every day of the week, workday of the week. And some will be weekends as well, because of the process that they're involved in. Within the ESS BIZTOOLS system, we've got 46 separate forms to help you complete the details of the task, what was being done. Now, I don't expect any of you to use all 46 forms on one client. That would be a record. But if you end up with 10 to 15 research and development clients, over a couple of years, you may use all 46 forms because of the requirements that they have on particular issues. And if you find that we haven't got the form that you think we should have, please send me an email and I'll make sure we develop one. But we think we've got them all in our system. So the research and development is a great activity for a young company when they might be trading at a loss, to undertake the all-important research activities that they require to develop their intellectual property, their knowledge, to scale up their operations. That ability to get back the cash equivalent of their research and development incentive is really part of their funding. And that's why I've raised it as the second item after export market development grant. The research and development incentives are very important for thousands of SMEs. Why not start promoting it and see what happens? Why not run a seminar or a webinar? Promote it in your market. Now, we can supply you all the resources, including PowerPoint slides for a webinar, including one that I've recorded, so you can listen to it and say, oh, gee, I can do it better than that Towers guy. Well, that's great. I hope you enjoy doing it. But you've got to do some marketing. And that's how I believe accountants offering these services can communicate with your clients and your prospects in your area, that you're able to advise them on these very important subjects to help them on their business journey. Following on from research and development, one of the most important processes then is to consider, does your client need to raise capital? I'll tell you a little secret. Most clients that I've acted for over the years that are undertaking research and development are always looking to raise money. Always. Because research and development takes a lot of cash. But they've got a dream, they've got a vision of where they are able to take their business. So the first area you should look at is, can they raise capital as an early stage innovation company? Now, an early stage innovation company is a status that's able to be conveyed to the company by a certificate from the Australian Taxation Office that the company has qualified for that status, or that the company has self-assessed under the legislation. Now, obviously, if someone's claiming they're self-assessed, there will be some critical observations being made by some of our professional colleagues advising potential investors into that company. So they will want to see the proof, won't they? Indeed, you would want to do the same thing if you were acting for a potential investor, wouldn't you? So within our system, we have set out a whole detail of every conceivable way that a company can achieve that status, so that you can complete the forms if they're self-assessing, under the gateway test. The gateway test has got 8 separate questions. The client has to accumulate a minimum of 100 points, at least 100, in answering those questions. They don't have to answer positively each question. They're just got to accumulate 100 points. It can be higher than 100, of course, and have the documentation to prove it. So we've got it that you can bundle it all into a nice report, get the directors to sign it, and then they can go off and present it. They don't have to apply to the tax office. Ultimately, the tax office will want that information when the tax returns are being lodged after the 30th of June. Now, if your client can't accumulate 100 points at this stage because they've only just started on the process, they are able to still get a Guernsey in this team by qualifying under the principles test. There's 5 key questions for them to answer, and they will need to justify the answers. Not yes, no, yes, yes. And that report has to go to the tax office, who, in conjunction with the Oz industry reviewers, decide whether they will award a certificate to that company to say that they've accepted that at this stage, the Australian government's accepting that this company qualifies as an early stage innovation company. Now, that's fairly simple once you get involved in it, and it will help your client. Now, where does it help your client? They can raise a maximum of $2 million because they're raising under Section 708, which I'm jumping the gun a bit because I'm going to talk about Section 708 shortly. But they can raise capital. So what's the big deal, you might say? Well, the big deal is the government built in an incentive to encourage investors to invest in these types of companies. This legislation was introduced when the Liberal National Party government were in power, and the Prime Minister was very keen to assist SMEs to get started. He knew what the problems were. And obviously I'm talking about Malcolm Turnbull, who was, as a businessman, reputed to have earned some significant sums of money from backing early stage investors, especially as the technology market started to hot up some 25 years ago. And he wanted to make it a little easier for SME companies to be able to raise capital. So they built into the legislation, and it's still there, I'm pleased to say, a 20% tax credit bonus to an investor. Now, there isn't a limit. The limit is $10,000 for a retail investor because they can only contribute $50,000 to a company trying to be assessed as a early stage innovation company. But if you're dealing with sophisticated investors, the investor can gain a maximum of $200,000. That's obviously computed on $1 million investment. And that's not a bad amount, is it, for that investor to come off their tax return? But it doesn't end then. There's more. And the big carrot, I think, is that if the entity that receives those shares as part of the shares received for introducing capital in this status process holds those shares for longer than 12 months and less than 10 years, there is no capital gains tax paid when those shares that we issue as part of the status process are sold to someone else. No capital gains tax if they hold the shares for longer than 12 months. Now, that's great, isn't it? And that's the incentive. I hope you knew all about that, but unfortunately, when I talk to accountants, I find there's very vague understandings. And again, I get some of these comments about and being an engineer or a scientist. You're not there testing whether the declaration the client's making are correct. That's up to them. They're signing it, not you. But it's a great way to help clients with their funding. I started mentioning Section 708 of the Corporations Act. It's been around a long time. The Uniform Corporations Act only started in 2001. So prior to then, most of the states and territories had legislation that would enable a private company to raise capital, and it's now known as Section 708. The legislation was quite surprisingly fairly similar in each state and territory. But there was no marketing allowed. There was no promotion. And you virtually had to be raising money from a family member or someone you went to kindergarten with, and you're still very closely involved with them 25, 30 years later. It's still there. It's been a great servant for small businesses. I've helped a large number of clients raise money under Section 708 of the Corporations Act. Crowdsourced funding equity raising was also introduced exactly at the same time as early stage innovation companies. Now, before I talked about a $25 million turnover. That's the turnover limit to be eligible to raise money as a crowdsourced funding equity raising company. It's available to any private company or unlisted public company that's domiciled in Australia. They can have worldwide operations as long as the head office is in Australia and there's a majority of Australian resident directors. And the company could raise $5 million in 12 months from the public. Now, there is a process. There's a process of making submissions to particular organisations that have a licence issued by Australian Security Investment Commission called the Crowdsourced Funding Intermediary Licence. Crowdsourced Funding Intermediary Licence. These are people with Australian financial licences who wear two hats. They are the representative of ASIC, and therefore they've got a lot of power and responsibilities, but they're also a broker. They're the spearhead of raising the capital once they've approved the company's application. Now, there's 16 of these brokers appointed in Australia. Unfortunately, only 2 or 3 seem to be working continuously at present because there's not enough deal flow, and I can't work that out. There's a lot of businesses looking to raise capital. Over $440 million has been raised from the public. And sure, there's been a couple of failures, but failures on the stock exchange too, hasn't it? It's a great opportunity. I urge you to look at it. We also have venture capital, which is for when your client's trying to raise more money and is larger and would not be a startup business, needs to be experienced. Potentially would be better off if they'd gone through early stage innovation company or crowdsourced funding equity raising company capital raising processes before. So what's your role in all this? There's a lot of work to be done. Every one of these companies that's wanting to aspire to raise capital will need a current, realistic business plan. A business plan that the leadership team signed off on, that they can deliver this result. And it should be a 3-year forecast at least if they're going to raise capital on that business plan. They need predictive accounting reports, budgets for each business operation, key drivers looking at the key investments that they're going to be making in inventory, in debtors, in work in progress, in research and development, in capital expenditure. And that investment will be partly offset by the amount of money they owe creditors at any time. They will need strong access to grants and capital raising. They need to be aware of that. They need your assistance to keep them abreast of it at all times. They need prompt accounting reports, weekly performance reports, monthly reports, because there's undoubtedly going to be requests from investors to place 1 or 2 people on the board of directors, and they will be expecting to see financial data. So there's got to be confidence from the leadership team that they understand the regulations, because they're operating as a de facto public company and they need to measure up to that performance. They will need your assistance to guide and mentor them on this process. This is the interesting and exciting work, which will help you. And there's a forgotten group of people in all this as I talk about it. And that's your team members. There's undoubtedly a huge growth in outsourcing of accounting services to overseas countries happening now, and it has been developing over the last 20 years. So there's a lot of work being done offshore, but there's still problems, I gather, from talking to accountancy firm partners all over Australia. Whenever I talk to them, I get asked, "Oh, Pete, you know any staff, good accountants, good managers that we can hire?" I say, I can't help you do that. I'm not going to encourage someone that already works for one of my subscribers to switch to you. But what services are you offering? What do your people do? And I get questions, why do you want to know that for? Because I want to know if your business is an exciting and interesting place to work at. Because if it's not, I don't think you're going to have much luck of raising your team numbers. You're going to have to continue the way you're going. Tax is important, but no one likes sitting there doing tax returns basically all the time. So what's your percentage of income from advisory services? And I have people at times say to me, we don't know. Well, I suggest you go and calculate, and I come back and I hear figures like 2%, 3% to few audits for charities and churches and sporting groups. I said, that's important, but there's a lot more. I think your aspiration should be a 50-50 split between taxation advice and tax return preparation revenue and business advisory services. And there are businesses around Australia doing that. In fact, I know of a couple that are really targeting zero taxation work. They just want to be the key advisors. And frankly, that's where the money is. We think we can help you to deliver these types of services, to enable you to offer interesting and challenging work in what we've been talking about. And this is only the funding of businesses. There's a whole range of other activities as well, which will then assist you to attract outstanding team members and, probably more importantly, retain them, because they will be happy with the work they're doing, and hopefully they'll be able to be promoted within your organisation and grow with your firm. They'll be able to do webinars just like this that would present to clients. They'll be able to confidently talk. At ESS BIZTOOLS, we promote the concept of industry champions. In this presentation today, I have talked about 6 or 7 key initiatives. I'd like you to have 6 or 7 champions. Now, you might say, gee, we only got 2 or 3 people doing this. Well, give them a couple of portfolios each, but make them the experts. But don't leave it with them for years, or it'll get like the problem with tax returns. They need variety. But it's great within a firm to be able to say, you want to talk about research and development? We'll go and get our champion, our expert on research and development. Because your client's going to feel a lot more confident. Gee, they've got a champion on research and development. They really can assist me. I'd like to be part of the team that's assisting you to deliver these services, because that's our role. My background has been, I've been in your position. I was the senior partner of an accounting firm with about 50 staff. And we tried to develop this new range of services, advisory services. We did develop it because I'd been the CFO and company secretary of a listed public company prior to going back into running an accounting firm. And I didn't want to sit there all day, every day doing tax returns. So we went out and promoted. We ran promotions, actually 3 nights a week for 30 weeks of the year. We avoided school holidays. and all the excuses, kicked off at 7 p.m., finished at about 10 p.m. People would turn up eating their McDonald's because they'd work. They were small business operators, where we talked the talk about delivering this type of services and grew our business. You can do the same thing. No one helped me other than FMRC, the Financial Management Research Centre that had been founded at the University of New England in about 1980 with a mandate endorsed by the Institute of Chartered Accountants and the Australian Society of Accountants, now the CPAs, to deliver programs which would encourage Australian accounting firms to deliver business-enhancing services to SMEs. I think we've still got that challenge to do that. I really do. It's not a completed work process, even though it was well over 40 years ago. We need to be looking very seriously at the services that we can deliver. You can deliver to your SME clients. The ESS BIZTOOLS team, led by me, can deliver practical, usable documentation for you to utilise to present those services to your SME clients. If you've got any questions, please contact me, peter@essbiztools.com.au. And you can also visit our website where you can see the full summary of the product packages which we've got available at www.essbiztools.com.au. I really look forward to hearing from you. Please send us an email, your comments. Or if you don't agree with what I'm saying, I'd like to hear from you also. And we will discuss that in a future podcast on the Accountant's Minute series. Stay safe. Have a great day. Goodbye.